selling in the money calls, your calls, and we end with a look at today's markets. Our first letter is from Ahmed, who asks, considering our polarized politics, you have to notice when there is across the aisle support for any issue. The Senate introduced a bipartisan bill Monday banning any prediction markets which mimic sports betting. Where do you think this is headed?
That's a good question. I wish we had an idea where this is headed, but I will say a couple things. First of all, when I saw the Polymarkets bar in Washington, D.C., the first thing that went through my head is we have totally jumped the shark. These people, as smart as they are, like, don't shove it in their face. And that is the most aggressive, like, FU I've ever seen. Polymarkets opening a bar in Washington, D.C. to trade markets and sports. I think they jumped the shark. I think that the Senate is going to absolutely shut down sports betting on prediction markets. And the reason is there's just too much pressure from the states. And I think that the whole thing needs to be overhauled because the states don't want to give up the revenue. All these sports betting sites are going to become publicly traded exchanges, which is interesting to me if they actually got exchange-based markets. So ultimately, the consumer is going to benefit. I don't really want to go backwards, so I think that prediction markets offering sports is actually a good thing. I just don't think it's going to withstand.
I was going to say, isn't that democratizing?
It is to a certain extent, but
it's bypassing the problem I have. First of all, I'm going to say, and I've said this
first of all, I don't think it's
many
going to pass. I don't think it's got the legislative clout to pass. I mean, meaning
Sport-
that I don't think they're going to be able to keep doing what they're doing.
The gambling sites are extremely predatory. I use one,
Yes.
so I don't want to sound like I'm being hypocritical. I use it. I understand what I do it for. I have fun doing it, but I think they are predatory, and I think they're causing a lot of issues. Having said that, fine. No problem to have your gambling sites, but you can't allow a Polymarkets or a Kalshi to come out and say, we're not a gambling site. We're going to bypass all the gambling rules, but what we're going to say is it's the Chicago, Bees versus the New York K's and say that's not sports gambling. It is sports gambling. So we need to come together, figure out how you want to have sports gambling in this country. I agree with Tom. If we want to put on listed markets, it's going to be unbelievable. The casinos aren't going to like that, and the betting sites aren't going to like that, but it'll be great for consumers. But you can't allow somebody to come in and say, this isn't sports betting, wink, wink, it really is sports betting. So I think they are going to get something passed that's going to either limit or shut down Polymarket. Polymarket, you can't trade in the United States anyway. So, right, you have to trade it.
They kind of can now. They got an exchange, but it's
you can actively trade Polymarket.
I'm not sure if it's
but
live
Polymarket
yet.
you can now.
I'm not sure if it's live. You can trade sports on crypto.com and you can trade it on Kalshi for sure.
Yeah, on Kalshi, right. But what I'm saying is, it's not right. I mean, if you think about like,
Robinhood's we can trade it on Robinhood too because they white labeled Kalshi.
Yeah, but that's all Kalshi. But what I'm saying is we need to standardize whatever the rules are. Let's just make the rules known to everybody and say, here are the rules, play by the rules. So, great. If they want to go listed, it's going to be the best scenario. But if not, we can't allow for lookalikes to pop up and say, oh, we're not really that, but you can do that with us.
Well, the challenge they're going to have is that so the states want to get paid. And the way to do this is to create everything exchange-based. All sports betting should be exchange-based, and then you got to market up the fees. So in other words, they'll cut out the middleman, basically the casinos, the market makers. They'll get down to like real, true high-frequency market making, and then mark it up so that the states take a share, and then you share with the states on the fee structure. And that's the only way that makes the states happy, and it makes all the exchanges happy. And I don't think the challenge that these senators are going to have is that there's going to be a lot of pressure now because you have people like Peter Thiel heavily invested in Polymarkets and Kalshi. You have Donald Trump Jr. on the board of Kalshi. You have him on the board of Polymarkets now, and so they're all embedded, and it's going to be a kind of a fight to the death here. And you've got the CME in partnership with FanDuel. You've got the NBA in partnership with DraftKings, and NFL in partnership with one of those two. So they're pretty tightly. This is not going to be an easy unwind.
Okay.
Sports betting makes sports more valuable. Period. So
well,
your sports franchises are worth a ton more.
It does so long as they control it and they can limit or eliminate, athletes being
Right.
tainted to say, hey, we're going to go throw again because we're going to get paid. Because as soon as you do that, then it's over.
What's really crazy is the Senate can introduce a bipartisan bill banning prediction markets, but we can't introduce a bipartisan bill that actually pays the TSA agents. That's what's fucked up.
Well,
Period.
I think in fairness, they did push a bill out and Trump rejected it.
Well, right. Well, so
So, I mean, in
6 of 1
fairness,
half done
I think that the Senate did do their job. I don't know what the bill is, but I think they did put something forward, and Trump said he's never negotiating with the Democrats. So, anyway.
Okay. Anyway, I'm sick of seeing you must have X number of years of experience to work for us. Screw it. Should I just start my own then? Says Nick.
I completely
For sure.
agree that
I
you must
know.
have X number of years is ridiculous. Now, having said that, I'm going through it with one of my kids right now, and he's a mechanical engineer, and he has applied to some jobs that require X number of years, but they're interviewing him, and he's doing well. So I think that some of these companies put it up there just as a protective measure, but if you qualify and they think that you can do the role, I think you really do have a shot. Now, if you can't get an interview because you don't have the number of years, then that's clearly a problem.
Right.
I don't know what line of work you're in. Obviously, we're big proponents of starting your own business, so if you're capable of doing it, if you have the idea and you want to do it, I'd say go for it.
It's funny in Chicago, a lot of the high frequency firms and a lot of the trading firms have the exact same approach, have the exact opposite approach. If you have a number of years of experience, they have no interest in you. And if you're fresh out of school and you're smart, that's who they're interested in, because years of experience work negatively in the world of finance because you have all these preconceived ideas of how things are supposed to work. And first of all, I think it's unrealistic to think that if you can't get an interview or can't get a job because you don't have enough years of experience, that you should just start your own thing, because that's incredibly hard to do, especially if you don't have enough capital. I mean, I think that's just a pipe dream in most cases. So Nick, I think you just have to keep, banging on doors and just tell your story. The key to getting your foot in the door is just being able to differentiate yourself from everybody else, and just try that. Try to do things different, and try to use the lack of experience actually as a positive, not as a negative. Hey, you know what? I don't have any bad habits, and I'm smart. Hey, listen, we have a wide open slate today. I'm Tom, he's Scott, she's Sol, and so please give us a call, 989
Were you being
Lost
serious?
Dog. What? What do you mean?
Nothing.
We got 3 lines open. What do you mean, a wide open slate?
No.
What?
What you said before that.
What do you mean?
That you're perfect, you have no...
Yeah, it's perfect. I like people that have no experience. The last thing I want
No,
is
I get it. Never mind.
I'm saying the last thing I want is somebody that's got an attitude or had a bad experience somewhere.
It's funny because when we started Thinkorswim, we hired, so you know this, but when we started, we hired mostly ex-traders and brokers from the floor for the trade desk. We're like, oh my God, you can't have anybody better because they know the business so well. And it turned out that
And
a lot
they're
of
unhireable
baggage,
by anybody else, so that's the great thing.
Well,
and there was a lot of baggage that came with those people because of their history on the floor. So I get it.
but not the majority.
No, not the
I
majority.
like
but
hiring traders because they have a different mentality. They tend not to be, how do I say this nicely?
You're not going to, so
You're
just
not,
say it.
yeah, so
They
just say
tend
it.
not to be as soft.
Right.
Yeah, they haven't been pussified.
Oh,
Oof.
okay, that's a new term. Wow.
Oof.
And
They
I've
tend to
never
be.
even
They
heard
tend to be. They tend to be a little rougher around the edges.
Sure.
Hey, Sol,
like that.
you're not going to unhear that one.
Never. Yeah. All right, let's take
She'll
a
get
call.
over it.
Stephen from
she'll get over
Miami
it.
Beach. Hi, Stephen.
Hi, everybody. Good morning. Good morning. Hello.
You there?
Okay, I'm calling. Yes, I'm here.
No, he's
Can you hear me?
enjoying Miami Beach. He's out on the beach right now. He's taking a walk.
Having a mojito.
Having a mojito. What time is it in Miami? It's 10
Yeah.
o'clock. You can have
10.
a mojito.
It's plenty of, yeah.
10
It's time
o'clock.
for a mojito.
The
10
last
o'clock.
time I went to Miami, I went to the beach.
You did?
Yeah.
Are you a beach person?
You mean going to the water? No. I mean, I like the beach. I just don't like the water.
Oh, okay.
I mean, I don't like to go into.
I love.
It's funny because I
ocean.
can go in the water. I hate sand. It just
I
gets-
know that's funny. I remember that of you.
I like sand. I like sand.
You're
I mean,
a
I like.
pool guy.
No, I like to. What I like about Miami is they rent those.
The cabanas.
Not a
Like you
cabana.
have the chairs, the
A
chaise
chair.
lounges.
The
Yeah,
lawn
chaise
chairs,
lounge. Yeah,
or
so you
whatever.
can rent
Yeah,
a chair and you can sit out there.
I was just there. I had the good fortune of having that experience. It's not so good.
Well,
I
mean,
for
it's not,
you,
it's not bad.
Are you guys-
I
it's
just don't go-
amazing for me.
I just don't go in the water.
All right,
I go
Stephen,
in
what do
the
you
water.
got?
But yeah. Steve, are you there? Steven?
I will move
I'm
on. He's
here.
not there.
I'm here.
Okay, we get this
He's
question a
having a
lot.
I'm
mojito.
here.
We get this question a lot. Did
I'm
either
here.
of you guys successfully get your kids into trading options, or was it an attempt that you guys gave up on? Daniel.
So I successfully.
Wait, Steve, we still got Stephen, no?
No. We'll
I
let you.
can't
think
hear
you do.
you.
No.
I'm here. I can hear you.
Oh,
Oh.
there he is.
I've got Stephen.
Here I am.
Sorry
Okay,
about
you
that.
got me. Great.
Stephen, I did not give up on you,
Yeah, we couldn't
I
hear.
gave up on you.
Well, thank you, Sky. I didn't think you ever would.
right?
We thought you were having
Interesting to
mojitos.
listen to. I lived in the Great Northwest. I lived in Vermont for 20 years. I lived in New York. I got to tell you, I came down here for COVID because my wife, she comes from here. We said, let's come down for a few months. And then it was like, and why are we going back up north?
Yes.
And that was 6 years ago.
Wow, so you now are
if you come
permanently
down, I
in
will-
Miami Beach?
I guess you could say permanently. It's not that we don't travel, but yes, I'm on Miami Beach, and yes, I just came back from walking the dog. It is absolutely beautiful, like it is every day almost. And if you walk into the water in the summer, where it's like you just walk in as if you're going into a bathtub. I don't know if that's good for the ocean, but it feels real nice. You don't do it in the cold weather.
All right, Steve. It's
The cold
32
ocean.
degrees in Chicago and it's almost April here. Shut the f up and what's your question?
Oh, God.
I don't want to hear your stories of
Oh,
dipping your
man.
toes in the water and
In the
walking on the
warm
beach.
water,
It's 32
salty
degrees here. We
water.
haven't had a nice
Right
day
away, inviting
in
you
5
down.
months. Yeah.
I was trying to entice you to come visit me. We have extra rooms.
It's
Okay.
dark. It's dark and cold here, and,
Well,
and
I will be there in
sleeting
June.
sideways. Go ahead. What do you got?
So you are very welcome. So
Thank
Tom,
you.
you have to stay away.
That's okay.
Okay, here's the question. As I've been referring Lossdog to my friends and family,
Okay.
worked a little bit. Anyway, so people, including myself, have asked, okay, so we know Bitcoin, we know Ethereum. I'm a little familiar with Solana. I don't know Stellar. What are the differences between these cryptos in terms of, I know they're blockchains, I know they're technology, but in terms of looking at them for long-term investments, like a buy and hold, most people are familiar with Bitcoin, but can you tell me the difference, like Stellar, what is it different? How does it differentiate? How will we make money as an investor? Go.
Well, they each there's different. You kind of have to do your own. Each blockchain is really different, and some focus on different forms of technology and payments and stuff like that. Stellar focuses on the bridge between digital and fiat currency, and they work with a lot of money transfer firms. Like they work with Circle and MoneyGram, Circle, and why am I thinking? I'm blanking on the other one, the big one.
Western
Tether.
Union.
What?
And Tether. They
Tether.
work with Tether,
Yeah.
Circle, MoneyGram, and they're really focused on a lot of like stablecoin payments and things like that. But each one's a little bit different. They all have kind of like a different, I don't want to say vision, but different type of technology. They're all trying to catch a little bit of a niche. But when it really boils down to it, the majority of crypto trading is in Bitcoin and Ether, probably 80%.
Okay, so do you see that changing? Like I was thinking
No.
that if and when I get my crypto,
Yeah.
I'd split it between the four just to diversify. But like I said, I'm not. Are those good in long-term investments? Bitcoin, you feel like, because everybody knows that in itself could carry
Well, I mean,
momentum.
we don't. The thing is, we don't know, and our goal here was not
Okay.
really to. I mean, our goal here was just to was just to seed. Was to throw a few seeds down, and just to say to people, hey, you know what? You've never owned any crypto before. here's a tiny little bit, and just watch it, see what you like, see if it's interesting to you. It's almost like, hey, here's some precious metals, here's some baseball cards, here's some crypto. It's just a different asset class. It was just to get people, in the door, just to have a reason to go back to the technology, see how it's moved, things like that. There wasn't really, this is not a get rich type of idea. It's just really more of an engagement thing to say, hey, you know what? Here's 4 different blockchains. There's lots of articles and books out there on Solana and Ethereum, and obviously on Bitcoin, and there's lots of different stories with all of them, and you can kind of figure out, hey, what if you find any of it interesting. I hold like 5 or 6 different cryptocurrencies, and I don't really know much about the difference between each one. I think the asset class is just interesting to me. That's all.
Okay, fair enough. Thank you.
Hi, man.
Great.
Take care,
Have
Steve.
a good day, everybody.
Finish your
Hi,
walk
you
on the
too.
beach.
Bye-bye.
You know what? I just had this idea. We're going to get all our Dog Pound and listeners and fans to go do the live show with me virtually when I'm down there in June.
Good luck.
Wouldn't that be fun?
Give out your address.
I'll be at a bar by the beach.
We've tried that before.
I don't care. Not with me.
Not with you. Yeah.
So there we go. So send me an email, people in Florida, South Florida, unless you want
I'm
to
going to
drive.
tell you this once and only once. Be careful what you ask for.
Yeah. Be
Yeah,
careful
well,
what you
that's true. I will have big bouncers, so don't get
Yeah.
any ideas. All right, so this is the question that we're talking about, that we get a lot. Did either of you guys successfully get your kids into trading options, or was it an attempt that you guys gave up on?
I got 1 of my 2. My son
Yeah.
actively participates in markets. He has a bunch of different positions
Options?
on. Yeah.
Cool.
Yeah, he got a margin call a couple weeks ago.
Oh.
And
Nice.
I had to get the risk team called me up and they said, hey, can't reach your deadbeat son, but tell him he has a margin call.
He learned well from his dad. Don't answer the phone when the
Don't
risk
answer the
department
phone.
calls.
Oh, boy.
When the risk department calls, you don't answer ever.
It was so funny. He texts me. He goes, "Do I need to do anything with this?" I go, "No, don't pay attention to it." I got
Oh.
So, and I'm 1 for 3. So 2 of them will engage with some equities, but just buying something they're interested in and holding it. And then I've got 1 who's a bit of a maniac. So he loves it. He's done a bunch of options trading, but now he's gone into some stocks that he's very bullish on. So we'll see. I like the engagement. So
Yeah, that's great.
whether they start slowly and get into it more actively, great. But yeah.
I spent 2 years teaching my daughter, but then she became a compliance officer, and she got shut down.
You
As
know
the
what?
chief compliance officer.
I think compliance officer suited her better than learning from you is where do I start?
But as the chief compliance officer, she got shut down and couldn't trade. So that was all
Maybe she'll
Scott's
get
fault.
back to it.
Yeah, that was my
after
fault. I think that was more
reasoned debates.
self-imposed, but that's okay.
Yeah, right now she's got her hands full.
Yeah.
Literally.
Okay.
Literally.
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 Next up, Mike says, I'm new to options and my recent epiphany is that one should almost always, at a minimum, sell in the money calls on a stock instead of simply straight selling it. And if you get assigned, consider it a win-win. Am I reading this right? Surely there's some other technically better strategy, but is this a good path for someone still getting their bearings in options?
I don't know what you're asking, Mike. I'm new to options, and my recent epiphany is that one should almost, at a minimum, sell in the money calls.
Yeah, I think the question is he better off selling stock or selling, some in the money calls?
Why would you sell an out of the money call?
Well, because you want more exposure. But at the end of the day, it's a really simple answer. Selling in the money is going to create decay, which is great, but what you can only make whatever you sell it for. So if you sell an option for $5, you can make $5. If you sell a stock for $50, in theory, it could go to 0. So if you are really bearish on a stock, you're probably better off selling the stock outright rather than selling calls. But if you're neutral to bearish, then you're going to be much better off. If you're right, you're going to be much better off selling options.
Okay.
Mike, I hate to disagree with Scott, but
Do you though?
no, I really like it.
Right.
But I think the
But if
play
you're
here is-
ragingly bearish, how is selling
because
a
you
call
don't
call?
know anything Like whoever
I
you
got
are.
that. I said.
I
assuming
understand.
that.
I'm just saying you don't know anything. Like if you're crazy bearish on a stock, you still don't even have any idea if the stock's going down. So give yourself the highest chance of success and sell an out of the money call. That's it. Just sell out of the money calls. There's no reason to ever sell in the money calls. There's no reason to sell stock unless you've been doing this for a long time and you really need the deltas. If not, sell it out of the money calls and learn the easy way. Give yourself a high chance of success.
There you go, Mike. Mike is my buddy who emails me. Okay, we have a voice message. Let's play it.
Voice message.
Yes.
Hey, Tom, this is Bob from Delray Beach, Florida. How would you trade the oil right now?
Oh, Bob from Delray Beach.
Thanks, Bob.
I've been to Delray Beach.
It's nice.
I was in a hot tub and the wind was blowing for like 90 miles an hour. I was giving a talk.
Oh.
And other than that, it's really
Wait, you were
nice.
giving a talk in a hot tub?
No. I was giving a talk in a hotel next to a hot tub. And I was in the hot tub and the wind was blowing 90 miles an hour. That's the only reason I know that I was in Delray Beach, because I thought it was going to be a hurricane. But I enjoyed that little town there. It's nice. But anyway,
Yes.
so today is, this entire move in crude oil, there's a lot of people, I think the whole world has been leaning on the long side, Bob, in crude oil, meaning that one way or another they've been trading it from the long side because of everything that's going on. Myself, on the other hand, I've been trading it and talking about this nonstop from the short premium side. I don't love the longer short side, but I do love the range bound play. So for me personally, I'm short strangles in there. Scott, I don't have what crude oil's doing right in front of me right now. It was
Oil
up,
is 91.52 up 330 and 340.
okay, so it's up 340. It was been up all night. It's had a big move. This for me is a range bound market. I think between 110 and 80 is kind
Got
of
a
like,
$4 range today.
yeah, today's had a big range. It had a huge range yesterday of almost $10. But
Yeah.
I kind of think that given the high implied volatility, this is, you can go really wide on like short strangles. I had
It's right now, IVR is 66. Was it like 120?
got to
It's high?
130.
130.
But it's
So
still-
it's been cut in half.
It's still
high.
extremely high. This is a great product right now. I'm talking about /CL. The options in there are very liquid. You could do MCL too, but they're not quite as liquid. But I personally think this is a really good market for wide strangles, because you go super wide. You go like 70, 150 and still collect some decent money. Or it's actually, if you want defined risk, this is a really interesting iron condor market. I am one of the rare people here that think this is a range bound trade in crude oil better than anything else. I know a lot of people like the long side. There's been a few of us that have been trading a little bit on the short side. I like the range bound side. I think 80 to 110 is like a really kind of fun skewed market. And anything outside of that, I kind of like it, from the short strangle to the iron condor, or short call spread, short put spread. I like both of those sides, but I like the range bound trade here, for me personally.
Okay, Rodrigo from the Dog Pound says, for SPX iron condors, what do you think about choosing wing width 50 versus 100 versus 150 points? Capital efficiency versus probability trade-off?
Yeah, that's it. I mean, Rodrigo, you're a smart dude. You know that it's all about a trade-off on the 150 wide is probably not going to give you enough extra credit, given that you're going to have to put up all that additional capital because it's 150 wide. I mean, personally, 50 wide, maybe 100 max for me, but I never go wider than that. I mean, 50 wide
that's
for
a
me
lot.
is plenty. My usual wide is 20 when I'm doing defined risk, so I go 20. So 50 for me would be a lot. I could see why some people go to 100, but 150, it's not worth it risk reward wise. I don't know about you, Scott, but that's just my
I
two cents.
completely agree. And obviously, so for those who don't trade SPX, that would be talking about 5, 10, or 15 points wide in SPY. 15 points is a lot. 150 is a lot. I would keep it 50 or under.
Yeah, I mean, if you're trading SPY, it's a little different, but I know it's the same exact thing, but it feels different.
Yeah.
But it is capital efficiency versus probability trade-off, and 150 is wide. You know, I like 50 or 100.
Okay.
Now, statistically, the wider you go, the better off you are. So, I mean, there's a side to Rodrigo's point, which is, you know, the research would show that if you go 150 wide or 200 wide, you're better off.
Yeah, but you might have a couple uncomfortable moments in that time.
You might, but statistically, you're better off.
Yeah.
The wider you go, the better off you are.
Isn't it interesting, like statistically you're better off there, and then you were saying the other day, yesterday, you were saying there's probably, what you've shown with research, there's not much difference between letting things go and fighting it
Right.
versus
That's
rolling.
that's one of my favorite arguing points is, that there's not much difference between letting it go and adjusting. But there is a lot of statistical evidence that the wider you go, you don't increase the number of contracts, but the wider you go, it's just, it's statistically, you're way better off. It's like being short a strangle. You get that higher return.
Okay. Remember to call us, 989 Lossdog. We
Yeah.
are here. Our lines are open.
Yeah.
Okay, next up. What are your thoughts on Jim Simon's trading style? And do you think a retail investor could replicate something similar today with the advancement of AI? Also, which trader or historical insight has had the biggest influence on your trading style? This is our friend Marcus.
Okay, Marcus, those are interesting questions. So my take on Jim Simons is very different than most people because most people, he's like in the Hall of Fame. So Jim Simons is the Renaissance technology guy. He was.
I think in the Hall of Fame is fair.
Yeah, he's in the Hall of Fame. My issue with Jim Simons is I always thought he was full of shit, and I hate to say that because I know his track record. He's a multi-billionaire, and they kind of defined the world of. He was like the first of the high frequency traders before there was high frequency trading. They were arbing. They were arbing markets and arbing options before anybody else. It was like Jim Simons and Timber Hill, and there was a bunch of firms. I'm trying to think, O'Connor. I'm going back all the way into the days of like the early days of like HFT and program trading before anybody else kind of figured it out. And Jim Simons and Renaissance figured it out really early.
Was he in the SIBO? No.
They were all over the place, but they were like a hedge fund, but the other firms were all SIBO or CME related.
Yeah.
And then when Citadel came along, they put everybody out of business. Renaissance included, and everybody else basically shut down, and then Citadel kind of took over. What drove me crazy about Jim Simons was the fact that he never came clean on what they actually did. Between the books he wrote and all the seminars he gave and everything else, just tell the damn story the way it was. Like you were arbing the markets. Like it wasn't something that.
Yeah, but he made for 30 years. He made 66% a year on average. That's
I understand.
Oh my God.
you're doing something really, really well. And I think the question.
What do you think they were doing really, really well, Scott?
Well, they were arbing. Whatever they were doing it well. I got it. So they were taking advantage. If they were first to high frequency trading,
Yeah,
you're
they
a
were.
platform,
They
all
were.
right?
They were the first.
That's a golf clap.
They
okay,
were the
but
first
did
of
it.
the raised bandits. They were the first firm to go out there and figure out how to arb one mispriced option against another on different exchanges. That's essentially, and same thing with stocks.
Okay,
same
so
thing.
why would you throw shade at that if they figured
I
it
don't
out?
throw any shade at that. I was really impressed with what they do. I threw
Okay.
shade at the
So
fact that they tried to explain it as something that it wasn't.
Like something
Okay.
sophisticated.
Yes.
Now,
Well, it was sophisticated.
Do you think that this is something that AI is going to allow?
Absolutely not.
Right,
1,000%. It will never be replicated again
Because the arb is gone.
because the arb is gone, because the markets now are inside of a penny theoretical. When you talk about the firms that are competing for order flow, the markets are so tight. This is back, these guys did put these numbers up when they were doing stuff that was just, the markets were, you could drive trucks through them. Now you can't even, now you can't even wedge a paper through them. So it is a very different world right now. And with the advancement of AI, it's even going to make markets even tighter.
Yep.
Okay.
Yep. Totally agree.
So which trader or historical insight has the biggest influence on your trading style?
I don't have one.
I don't have one actually, but I do think that there's a bunch of like traders that I watched over the years that were really interesting to me, but they're not. Nobody's ever heard of them.
Yeah.
It would never be somebody like Jim Simons or anybody like that. That's not.
Okay, so can you say a name?
No, because nobody's ever heard of them. They're just.
It doesn't matter. They can go hear about them now.
They're just pit traders. There's nothing. I don't even want people looking them up. There's nothing. Just people I respected.
Oh, so no books.
No.
Oh, got it.
No.
So there's no references to go
No,
find.
no. I don't have like mentors and stuff like that. I
Yeah,
wish
we
Jim Simons
covered
had just
this.
said, hey, here's what we did. And it's pretty cool.
Okay.
I mean, that's basically what Ken Griffith said and did. And he was pretty straightforward. We're not huge fans, but I mean, he told it like it was. Hey, this is what I did. And, I was better than anybody else at it.
Sure.
That's cool.
Yeah. Okay, the dog pound asks, what factors drive premium to increase or decrease other than IV? For example, in /CL, as in Tom's famous saying, they pumped, crushed premium.
Scott, what causes premium to increase or decrease?
Other than IV.
But that is, IV is premium going up or down, and premium's going to go up or down when options get bid, and options are getting bid because people think something's going to happen, period. So, there is no secret that the exchanges don't come out and say we're going to increase,
Right.
volatility, which causes premium to go up, or we're going to decrease it. Firms do. And, firms, what happens is when you're pricing an option, all the items are known. So the time, the days to expiration, price, the underlying dividend, interest rate. The one that you don't know is volatility. And this is where firms spend gazillions of dollars trying to figure out the vol models. So as you can watch vol go up, premium is expanding. If you see vol coming down, that's premium contracting. It's not, one isn't the other. It's the same thing. When you're talking about vol increasing, it's because premium's expanding.
Yeah, Marcus, I'm sorry, not Marcus, but the person that wrote this in the dog pound. If you're a buyer of options, that means everybody else is probably a buyer of options.
That means premium's expanding.
That means premium goes up. If you're a seller of options,
it's simple to think about it because
Yeah.
if you have everybody going one way,
yeah,
the market makers are going to back away. They're going to say, "Well, I'm not selling it to you here. I'm raising my offer."
if people are
and then
buyers,
if everybody's selling, they're going to say, "I don't want to buy this many. I'm going to lower my bid."
if people are buying options, volatility goes up, premium goes up. If people are selling options, volatility goes down, and premium goes down, and that's all there is to it. And everybody does the same thing all the time at the same time.
And it's amazing to see how accurate the markets are, option markets are, consistently. And I remember, a long time ago, seeing in the pit, and the front month straddle went up like $5 with nothing happening. We're sitting there looking like, what's going on? And then guess what? Something happened. So it's really amazing how you want to say prediction markets. You could almost say, that the options world really was the original prediction market, because you could see as vol's going up, there's a reason vol is going up. There's a reason why when you look at the VIX right now, VIX cash is 26.56 up 41 cents. Statistically, that's way above the average. So what that's telling you is the markets are saying something's going to happen, and look what's happened. We've had some big down moves and we've had some big up moves. So if you see, I think we're going to continue to see these kinds of swings until you see the VIX return, 14, 15, 16, 17, something like that. But if it's going to stay above 25, be ready for some big swings.
Okay, there you go. Next up, my question is how to manage risk with futures options. I followed the stay small, keep positions 1 to 3% of BP buying power and their goal of 0.01 to 0.03 daily. But with futures options, it changes the math because span margin is different. How do you approach BP usage and daily theta with futures options? How to stay small and not get too big?
It's a good question, and that's why you mix up, futures options with listed options and everything else. But the simple answer here is, and this is really simple, there's a quick back of the envelope way to approach this, and it's if you're only trading futures options or you're only trading in portfolio margin, reduce the amount of capital you're using by 30%. That solves the whole problem. So in other words, if you have a $100,000 account and you're used to using 50,000, then now you have a $100,000 account, you only use 30,000. And that solves reduce the amount. If you're using 50 before, you reduce the amount by 30%. So now you're using 35,000. And that's the simplest way, back of the envelope, to make the necessary adjustments to account for portfolio margin and span margin, which are very similar. And that's how we recommend you get going. And then over time, once you prove concept that you can deal with the additional leverage, then you begin to slowly scale back up. And the other way to do it is you just kind of mix and match your positions, which you should do anyway, but reduce by 30% if you're only using futures options, and that solves the problem of trading too big.
Okay. Remember to call us, 989 Lossdog.
Yeah.
We want your calls.
Harder questions too.
Oh.
Sure, I want the tough stuff.
No,
You don't
they
want
could
to
be
scoop
silly
vanilla
questions
scoop.
too.
Oh, you could be
Chocolate.
stupid questions too. Yeah.
There's no stupid question, but there's silly questions.
Silly.
Okay. Want to trade USO defined risk, yet the markets are very wide on the call spread side.
Yeah.
Is a short put butterfly a better alternative, or are there other strategies that can narrow the spread? Says Chris.
Unfortunately, Chris, USO sucks. It's really a hard. I mean, considering it's probably the best known of all of the crude oil ETFs, the markets in there are just embarrassingly bad. I mean, I guess crude oil is moving around a lot, so maybe you can make an argument that's why it is. But to me, it's a little embarrassing how wide the markets are in there. A short put butterfly. I mean, it really depends if you want to sell a short put butterfly, great. You will get a pretty good market in that, I'm assuming, maybe 2 or 3 pennies wide. But that's a very bullish trade. So if you're going to sell a short put butterfly, you're just hoping the crude oil goes higher. But sure, go ahead, try it if you want. I have no issue with that. It's a hard way to get a fill, to collect a few pennies. But if you want to do it, sure. It's a high probability. Selling a short put butterfly is a very high probability of success. You're just not going to make a lot of money on it until late in the cycle.
Late, and if you're wrong, you're going to have a problem. My preference, and so you don't have to manage it, would be trade a smaller size, excuse me, and just sell a put spread.
Yeah, his argument here is that the markets are wide on put spreads, and they are.
Yeah, I got it. Well,
Yeah.
on the calls, I got it.
Yeah, I mean, the markets are wide. I mean, I try the options on MCL. They're the same size as USO, so not CL. Those are 10 times the size. But if you try MCL, you might get a better market. Those are the futures options. Those are the micros. They're 1/10 the size. So one MCL contract's equal to 100 shares of USO. Very similar. So you could trade one. You'll get a better market, I think, in the MCL options.
Okay, let's take a call. Ryan from Arizona. Hi, Ryan.
Hey guys, how are you doing today?
Hey, we're good. What's up?
Hey man, I just had some ACX fund that I see trending all over Stock Twist and Twitter.
Hold on, what was the stock?
It gives-
I didn't hear you. What was the stock in?
VCX.
VCX.
Victor Charlie X-Ray.
Yep.
Yeah, so it gives people access to SpaceX and OpenAI and Anthropic, so it gives the public access to it. What are your thoughts on funds like this? Is this good for the public, or should the public stay away from things like this?
Well, it's really funny that you mentioned the stock, because yesterday I was doing a podcast with Adam Mesh, and he talked about one of his buddies was an early investor in this. One of his buddies put $15,000 in this fund when they were just starting out. They were trying to raise some capital. And yesterday it was worth $300,000, and so he was just talking about it because he was like, this kid had no idea what he was investing in, and it turned out it was this particular fund.
Well, good news for him. It's worth a lot more today. I've never looked at this, but the 52-week, the range was 31 to 200, and today it traded 320. It's now 260.
Yeah, it just IPO'd 2 days ago or something. Yeah.
Well, the problem is it's 250 by 269. It's $20 wide on the stock.
Yeah.
It looks like it did.
Yeah, it's a super weird. I mean, here's the interesting thing, Ryan. So conceptually, I do think this is interesting conceptually because, and I thought Robinhood just launched a similar fund, RVX. Scott, is that the one? I'm just trying to think, which is a similar.
That's the Russell. RVX is Russell.
Oh no, then that's not it. Robinhood just launched a venture fund similar to this. I just don't remember the symbol.
What was it?
RVI.
RVI. Okay, what's that trading for? It was around $22 or something.
It's about 20. It's a little under $25. It's had a range of 21 to 25.
Right. Well, it went public at 25, and it's very similar concept where they're buying a lot of startups and stuff. But yeah, these guys.
They're buying, or you mean you can invest in them? They're not buying them.
Yeah, well, they're investing in their pre-IPO.
Yeah.
But I mean, these guys, VCX did this. I think a while ago. They did the Anthropic, Databricks, OpenAI, Anduril, and Ramp, and they, they probably have a bunch of other ones that aren't necessarily as good, but I think it's crazy overpriced right now. Like, it's ridiculous. I wouldn't touch it here.
But
Ryan.
isn't this? But talking about, and I didn't know this. I've never heard of this, but in talking about should people be able to trade, and this is going to come out in the Unleashed, accredited investor or not. So here you could do this as a non-accredited investor.
Yeah, which is what I like.
I think you'd be very supportive of it.
I am very supportive of it. I think it's crazy overpriced right now because it got ahead of itself, but I'm incredibly supportive of it. Yeah.
Okay.
I mean, I don't understand.
$20 wide market, you can't really trade that.
No, you can't trade it. But I think more and more companies, Ryan, are going to do this, and it is a way for individual investors to get involved in without having to go through the whole process of private investing. And we're actually covering this in the Unleashed. We're going to push out on this Friday. We're talking about accredited investors and opening up that market to basically everybody. And it's an argument.
And we don't exactly see eye to eye on this one, so I think it's going to be a good episode.
It's a good one.
Yeah. But I think, Ryan, for me, this is clearly something that can't be discounted. It's going to be a big part of the future. Why should only crazy wealthy people that can invest in private equity funds be able to invest in OpenAI or Anthropic or something like that? I mean, why not open it up to everybody via whatever? If it's a closed-end fund, if it's a IPO like this, sure, I'm all for it.
Okay, next up. Reading Macmillan, I understood to adjust gamma first and delta after it. All I understood from Tasty is just to roll the untested side to keep delta neutrality.
Everybody read Macmillan. I read Macmillan before I started this business. So Larry, who is a super nice guy, Larry Macmillan wrote Options as a Strategic Investment. I think
Is he still alive?
Yeah.
Oh.
I think the first time I read it, and I've done multiple seminars and webinars with Larry. He's great. The first time I read it, I think I was in my early 20s, and I think the book was about 300 pages, and I didn't understand a word. But you had to read it if you wanted to pass the test to become a member of the SIBO.
Oh my God, I remember
that was the only
that
book. Now it's like 1,000 pages long, at least.
That's funny.
It's probably on its 20th version. Do you know we used to give away this book? Like we used to, I think when we first started Tasty, we gave away 200 copies of this book and stuff. And Larry did an amazing job. This is essentially the Bible. I think it's dated now, but I think for a long
books.
Yeah.
No, but for a long time, I mean, this has been essentially, kind of the reference guide. What I will say though, is that Larry wrote this back in the day when most of the people that read it were professional traders, or it was a different world than retail options are different than they were today.
Yeah.
There is nobody in the world right now that would adjust gamma first and delta after it. That's completely reversed. And I wrote back to this customer, I said, listen, when he wrote this book, that was probably the case. But in today's world, we roll the untested side to keep delta neutrality. We adjust our deltas, we roll out in time. We do everything that we can because retail buying power requirements automatically keep your gamma in place. So all you really need to do is adjust your delta. So
you're only going to need to adjust your gamma if your delta starts to get to
right. Because of retail margins, like when I first started, I was on the floor. And so I had to always adjust my gamma because there was no margin requirements. But if you're a retail customer, the margin requirements are so high that you don't have to worry about your gamma, just adjust your delta. So you adjust by rolling up or down the untested side, rolling out in time, recentering, whatever you want to do, but you adjust your delta.
I think it's a little oversimplified. You do need to be concerned about gamma if you're short a lot of out-of-the-money options and the stock has a big move. But other than that, I agree with you.
Yeah, I'm not gonna let Scott have that last word.
God.
You do not adjust gamma in today's world. You adjust your delta. It is very rare that a retail customer gets caught in a gamma squeeze. Very rare.
I wish I could agree with you, but having overseen our risk department, I could tell you many times where we had to adjust gamma. But go ahead, that's okay.
You need a new risk department.
Thank you, Scott.
You're welcome.
Rodrigo in the dog pound says, at what account size or trade frequency do you think portfolio margin meaningfully changes strategies?
Over 200 or 250,000 for sure. I mean, it doesn't, Rodrigo, it doesn't change strategy.
Right,
It just changes your approach. Nothing changes strategy. If you have $100 or you have $100 million, basically this, or $1,000 or $100 million, your strategy is going to stay the same. It's just, it changes your approach to trading and everything else. So trade frequency, all that stuff. I think 200, 250, that and up, that's where portfolio margin changes your approach a little bit.
Okay, well, let's take a call. Niko from Chicago. Hey.
Niko, what's up?
Hey, good morning, fellas.
Hello.
Morning.
Do you think people who create their own watch lists, scanners, indicators, and algorithms would be earning commission from users?
Would be earning commission. Do you mean could you sell your idea
Your
to
watch
people and
list?
get paid commissions?
Because it's like your own.
No, you can't. Well, I can tell you this. It's really simple. You could sell for a fee. You could sell something, but you can't participate in commissions unless you're a licensed individual.
But if, Niko, are you asking, you think your watch list
Is worth money. So when somebody
as
trades off, it,
as
they
like a
pay you
newsletter or
commission.
something, or what?
Well, yeah, I guess if it's like a scanner more so than a watch
Yeah, a
list,
scanner, right? You
You have
there
your
are,
own.
yeah, sure. There are people out there. There are people out there
yeah.
that market their scanners. They're
But not on a
But not
commission
commission.
basis.
no, not on a commission basis, just on a
Yeah,
licensing
you can't
basis.
do it on a
Yeah.
commission basis.
No, you can't do commissions. You could do licensing.
Right.
Okay, well, thank you for the answer, guys. I was thinking the word was criteria. So thank you guys so much. Take care.
Okay,
Of course,
sure.
you too.
Sure. Yeah, you can't share in fees.
Unless
No.
you're licensed. And there's no firm that's going to allow you to do
And there's
that.
no firm that will do it. Exactly.
Yeah.
Okay, Dog Pound says, what's a gamma values you consider high, low, optimum per trade? What's a gamma value
What's a gamma value you consider high or low or optimum per trade?
per trade?
There is, as a retail customer, you are not going to, I can't give you an answer. Because again, the gamma risk is built in to the on the future side. It's actually very accurate. It's built into the model. On the listed side, it's all just part of the buying power equation. So I don't know off the top of my head. I can't give you you're looking for a point whatever. I don't know exactly.
Okay.
I mean, I don't know. Do you know, Scott? I don't know.
I don't. And because of, the mechanics of trade small, trade often, gamma rarely.
Yeah.
I mean,
Honestly, I don't even use gamma as
Yeah.
one of my. So like I have three columns. I have
Delta,
four
theta.
columns total, and I'll use like volume and delta in addition to bid and ask. And you can go wider. You can have like 6 or 8 columns on most platforms. But I mean, I would never even choose gamma as one of my top 10 columns.
That's
Like,
funny that the next question I have is, do you follow tasty mechanics about rolling the untested side, or you complicate yourself adjting gamma too?
What is
We
this
just
all
talked
of a
about
sudden?
this. I
What
know.
the hell?
what happened with gamma today?
Yeah,
Did we
I don't
put
know.
something out?
It's funny.
Of course, I follow tasty mechanics and roll the untested side. I roll and recenter all day long. That's all I think I do in my life. My whole life is rolling and recentering.
You
but
follow them. You created tasting mechanics.
I know,
So yes.
but I don't complicate it with adjusting gamma. No, we don't
Right.
do that.
Right.
Yeah.
No, we're too
Get rid of
smart
it.
for it. We don't need to adjust no stinking gamma.
Oh,
Right.
okay. Do you wonder why Bitcoin seems to be a more stable asset class when compared to the metals like gold and silver? The volatility of gold seems crazy for a physical asset. Totally agree.
Completely agree. And it's no longer the flavor of the day. So, people have moved on from crypto to the metals and to oil, and then they'll move on to something else. Does it mean that crypto isn't going to come back and play and have the same kind of activity and action that it did a few years ago? Absolutely not. It absolutely could do that. But right now, it just seems to, it's funny, when I saw a meme that said, based on, the availability of prediction markets, that crypto is now, basically the boomer trade. So it's just, it's moved on.
Funny.
People have moved on
wow.
to something other than shiny and flashy.
Okay, boomer.
It's hard to
I
believe.
guess.
Well, I can believe that crypto's the boomer trade, but it's hard
Yeah.
to believe that gold and silver have a higher volatility than
Yep.
digital assets, which is unbelievable to me. Yeah, it's amazing that Bitcoin has become the more stable asset class when you compare all of those asset classes.
When you've become the spokesman for crypto.
Yeah, I mean, when you
I
look
know.
at when
My
you look at
friends
your
now
crypto,
call me the crypto queen. I'm like,
when you look at your crypto position and you're like, oh, I got no risk here, like
Right.
it's 70,000, I got no risk here, and you look at gold and where's gold right now? 4,400.
44.
Yeah, I mean, it's insane. Like, I mean, this morning I saw
Needs to
gold
go
down
back down
60.
to
Last night it was up 30.
2024 levels, please.
What do you want?
Gold to go back down to 2024 levels.
You want
Why?
what price do you want gold at?
Like
Why, you want to buy it?
2,000.
2,000?
Yeah.
You're
Why?
never going to see it again
Aw, why not?
because you're not.
Who cares? What are people doing? Oh,
I don't know what they're doing with gold, but why do you care where it is?
Yeah, what difference? I'm just curious. What happens if gold goes to 2,000? Are you buying it? There's
I
no
can
chance.
no
'cause if
longer
gold
buy
went
my
from
jewelry. It's so expensive right now.
All right, that's fair because
Yeah.
you would never buy it if it dropped from 4,400 to 2,000. You're not standing up and saying I'm
No,
bid.
but I have my amazing jeweler in Ecuador, and I have custom-made things with her. I can't do it at this price. It's impossible.
Just adjust your size.
That's
Just
a
buy half the
high-class
size.
problem.
I mean, of course it is, but
Yeah.
why? I just don't understand why it's at this level, or whatever. Anyway, next up, do you think that starting a new business is easier to execute in good times or in bad times? You seem like you would prefer chaos over normalcy. Well,
Go ahead, Scott.
Well, I will say this. Chances are you don't get to pick the economic cycle that we're in when you start your business. So when we started Thinkorswim, it was the dot-com bubble.
Crash.
And people
Crash.
And people were like, oh my God, can't believe you just started a business. What a horrible time. And we looked at each other, we're like, hey, these are the cards we're dealt. We got to play the hand. And it turned out, we've talked about this, it turned out to really be an amazing time for us because
Because you get air on chairs cheaper.
What's that?
Because you get air on chairs cheaper.
We did get air on chairs cheaper because firms were blowing out, which was awesome. But more importantly for our business was that we couldn't get a clearing firm to talk to us. And then finally we did, and they're like, okay, great. Now, once all hell broke loose, then people were like, oh, we'd love to talk to you. We would have talked to you. And we're like, oh, yeah, really? No, you wouldn't. And, we've been extremely loyal our whole career, and we've stayed with that firm, and we use that firm in another iteration for Tasties. So the answer is, again, you can't control it, so I wouldn't worry about it. I mean, if we went into, like, let's just say that it was in the middle of 08, 09, you were looking to start a business. The problem is going to be not that your idea is better or worse. It's going to be harder for you to attract capital. So that would be a difference. But if you were getting going, I wouldn't worry about it. My dad told me a story. He was trying to raise money, and the offering went out on the day of the crash in 1987. And I said, I'm guessing
Good
that you
timing.
did not get any responses, and he said, absolutely none. So, from that standpoint, if you're looking to raise capital, clearly if we are in a ragingly bullish market, capital is going to be easier to come by. But if it's just the concept, I wouldn't worry about it and just go for it because you can't control economic cycles.
I when I graduated college, we were in the middle of a horrible recession, and interest rates were 20%. When I got my first job,
what year is this? 1929?
1929.
Yeah, 29.
I got my first job on Wall Street, and it was.
So 1 for Sol, 0 for Tom. Go ahead.
I got my first job on Wall Street. It was like 1980, and interest rates were 21%, short-term rates. And we were in the middle of a horrible recession. It was like the worst of times. gas crisis, everything. And
Gas was like 30 cents, but yes,
Yeah.
relative, it was expensive.
but all I remember was I didn't know anything. It seemed normal to me. Like it's just, I mean, I went to college during that entire, economic downturn when everybody else was bitching about everything, but it seemed totally normal.
Isn't ignorance at that point is
Yeah,
really
I know,
amazing.
but like you don't
Bliss.
even know. It wasn't for 20 years later until I figured out, oh, this was a bad economic cycle. We started, like Scott said, we started Thinkorswim in the worst of times when the market was crashing. We started Tasty in, I raised money for Tasty in 2009 when the world was crashing and it was easy to raise money. And then in 2010, we started the business. The world was still crisis all over the globe and chaos, crisis everywhere. In 2010, 2011, fiscal cliff, countries going out of business. We started Tasty, no problem. And, and I don't even, the worst of times when everybody else is just bitching nonstop and complaining about everything is the greatest time to do anything. When everybody else is in the worst of times, I promise you.
Yeah, and that's the
times.
contrarian approach, but you have to have a stomach for it. And
If you don't know any better, you have a stomach for it.
Yeah, if you don't know any better.
Well, who knows any better?
You can't control the economic cycle. So if you're going to do it, you can't sit there and wait and say, well, I'm going to wait 5 or 10 years because I think the economy is going to be better.
Right.
Just you go do it.
Right.
Yeah, you just go do it. You don't know anything.
Yeah, just go do it.
That's why I hate when kids go, oh, it's a horrible time. No, it's not. It's great. You're out of school. You're ready to go. Don't give me that bullshit. Just go. I'm giving a speech this Saturday morning to a bunch of kids, college grads and grad students that are just about to go into the world. Oh man, they're going to be in for something special.
Nice.
Fun. Okay. Let's go to market talk.
All right. Well, we're moving. SPOOs are down 50. They're down 8. They're moving all over the place. You got Bitcoin down 800. Oil is up 270. Nasdaq's down 93. Silver's up 70. VIX future is down 15 cents. It was up a little bit this morning. VIX cash is up 4 cents. But again, still it's $26 VIX cash. It's a big number. Bonds back down to, on the 112 handle, 112.26 down.
Yeah, but they were a lot lower this morning.
Yeah, they were. They were.
Yeah, I'm just looking. They were a lot lower.
What this says to me is, again, there's going to be opportunity. Both, you can trade it long or short. There's opportunity all over the place right now if you can pick your spots. I mean, S&Ps, again, just rallied 50 handles while we were doing the show.
Well.
Yeah, it's crazy.
Right?
And
it's a big move.
Yeah, I'm just looking at some of the prices right here. Crazy. And I love the. I mean, gold was down when we came on air. Gold was down 50. Now it's up 10. Silver was down.
Gold's had a $150 range today. Silver has had a $4.50 range today. Those are big moves.
Oh yeah. I mean, I'm looking at different stocks and it's funny. Micron, which had that earnings last week, remember, got up to like 460 on earnings. We said it kind of
395.
395, yeah.
Stick a fork.
Yeah, finally. And looking around just markets, I mean, Apple's probably the strongest stock today, but holding the market in there. Sometimes Apple does its job.
I would just like to say that was my pick for the end of the year. You're welcome.
Oh, there you go. You're amazing. I'm looking to see if there's like, I mean, they have been, $50 range in the last hour.
Crazy. That's a big range.
Mm-hmm.
Yeah, it's 1% range in the last hour.
Yeah.
I don't know what kind of volume today, but the volume's been pretty strong lately. So, good trading
for traded almost 800,000 contracts already, which is a lot.
Yeah. It's been what I think is really interesting about what's happening right now.
Yeah.
With all this movement, between war, between political uncertainty, between all this geopolitical stuff and everything else. What I think is really good is when this happens early in a year and it kind of, pops volatility, gets all the markets all hyped up and stuff like that. I think it's really good for trading because I think it gets people,
Engaged.
fully engaged in the markets. It gets people involved, and also, you know, sell-offs in the market like this, even though it's nothing huge, is it 10% yet? No.
In the market? No,
Not quite.
No. We traded on 4. We're about like 8%.
Okay.
7-8%.
I wasn't sure from high to low.
We were a little over. Well, I can tell you. Let me just look at SPX. SPX.
I wasn't sure from
traded.
high to low. We did 10%.
7,000 was the high in SPX right now. It's about 400 and change off, but we're about 100 points lower, so 500 and change. So now about 7%.
Okay, because I would think that a 10 or 15% pullback, anything in that range, is just, it's good for business. It's
Yeah.
like, it's healthy, because you can't have an environment where you just go straight up
Right.
and there's no two-sided trade.
Right.
And you can make up all the stories and reasons and everything later on, but just all the discussion around, you know, why this stuff is happening. And when you start to see things like the movement in gold, the movement in silver, the movement in crude oil, you start to realize, okay, the tape is bigger than the story. And for that reason, trading to me becomes so much fun and so interesting. That's it.
Agreed. You know, a year ago last April was the craziness. So
Yes, the golden child got married, and I spent the whole morning of the wedding in the lobby trading with the other losers.
Oh my God.
All right. On that note, happy Tuesday. Thank you for watching.
Please.
Sol, you want to take us out?
Please like this video and subscribe to our channel. And let's take us out.